Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So on the weekend we said that in general the background for a pullback on the euro currency exists just because on the weekly chart we have bearish stretch pattern, showed Napoli combination of the strong resistance that we have on the weekly chart and overbought. That creates the background for a possible pullback. But last week the problem was in the price behavior on the daily in intraday charts, because market absolutely didn't want to show any downward direction, stands tight in the triangle, and that makes us think that probably another spike, short-term spike, should happen before the major pullback starts. Currently this confusion factor has been resolved and market starts downward action. The short-term bullish context and potential bullish context has been destroyed is because the triangle that we talked about now has been broken down. And it means that the reaction on the strong resistance area on the weekly chart also has started. So now the question is where a potential target of this downward action and where we could consider taking the long position on the euro currency. So obviously here we see the big cluster in the combination of the fib levels starting from the 101.20 approximately and up to 101.93. So you could see it here is in fact the crossing or overlapping two confluence supports. It's 101.43, 101.93 and 101.43, 101.20. So that's create a rather strong level, and this is most obvious level where we could consider taking the long position. Besides, if market will keep downward action in the nearest couple of sessions and will reach the first upper level 101.93, which is also a 30% support of this thrusting action on the daily chart, which could be considered separately as a background for a possible bread butter buy trade. That together we will get as a bread butter potential trading setup as reaching of the strong support area. Simultaneously, this is also the possible target on the downward action. That's what we could say about the euro currency. Speaking about the grabber that we discussed and probably potentially could be formed, now we do not have it because this close yesterday was above the MACD, so we have the confirmed bullish trend, but currently price action stands already below the MACD indicator. I mean MACD predictor, so it means that on a simple MACD we have the bearish trend, but it's not confirmed yet just because this session is not closed. Once it will be closed below and lines of the MACD crossed, this will confirm the bearish trend as well. So that's what we have. So we don't have any grabber. On the longer time frame, on the follow time frame chart, and take a look, we have actually this triangle that we've got previously. Now it is shows downward breakout, so it seems that the hand shoulders that we discussed and we do not have and we weren't actually brave enough to take the position on it. Those of you who have taken the shorts have made the correct decision, and you can see now market stands in a good downward action. So here we have the ABCD pattern, which is also the major extension of the head and shoulders pattern that we have, and market hits the OP, breaking the nearest support area. So next destination point, as we already talked on the daily chart, is a confluence. And take a look, it's also XOP 101.11. That stands very close to confluence area, making the agreement with this support area. So reaching of this level just provides even stronger support, and that's probably the destination point that we could consider. It's in the current action to the downside, because here market actually has no another support areas, and it could keep going lower, especially as we could see here some acceleration. Probably that might be the preparation of the market or making bet on a coming hawkish Fed minutes on Wednesday. So usually traders taking position in advance, as you know, and close the positions when the release happens. So that might be the particular the case. So in this circumstance that we have currently, it seems that the market should reach this target, this XOP area. On the hourly chart, on current performance, you could see that, well, actually this is not some kind of the reversal, just flag type of the consolidation is potentially looks bearish. So this is continuation patterns forming after the downside action. Suggests that market should keep going lower. So here, as you can see, how market performs with this ABCD pattern. First was a COP, touched pullback. Now it's OP. Now market stands in a minor reaction, and it seems, just because of the price action, as I said, this acceleration tail close on this candle, as you can see, right to the OP target, forming minor flag consolidation. It suggests that probably another action could happen to the XOP. At least this is best area to consider for taking the long position. For the bearish situation, stands a bit more simple. So if you have position, you just could trail your stop, keep it on the break even or whatever. For taking new shorts, well, theoretically you could try maybe some pullback, some retracement, maybe inside the flag, placing somewhere near standing stop, using some fib levels, maybe based on this recent thrusting action, maybe just above the trend line has been broken. This, by the way, the trend line of our triangle, if you remember, which is actually also then some kind of the neckline of this skewed head and shoulders pattern. So this also is not forbidden. If you see the potential with this trade, why not? So that's what we have currently on euro currency.